the same field in terms of whatever we do. So I'm gonna hand over to my co-MC to introduce him. And can we just stay put? We are only left with this speaker, then one speaker after this one. We are almost done. Choir, please prepare. After this speaker, we're gonna grace us with a song because the last speaker, with the high note. So now, please introduce our next speaker, ma'am.
Thank you so much. I'm just going to read our next speaker's bio quickly. Khumbudzo Ramatlapa, the founder of Tomboni Investment Firm and a tutor at Scholar Academia. He started investing 4 years ago and quickly fell in love with it. He wrote a book called Fundamentals of Investing in Stock Market, which will help guide new investors on how to invest in the stock market. Can you clap hands for him? And to welcome him on stage.
Good afternoon, everyone. Hope everyone still has a few energy to spare. So, as they introduced me, my name is Khumbudzo Ramatlapa. So, I'm a business colleague to Binyego Mashele. Been friends, I don't know, since kindergarten days, crash. So, basically, as they've announced, I'm here to talk about stocks, investing. And I'm going to ask a question. How many of you have tried investing, basically? How did that go? Not so well, eh? Yeah, because, so, here's the thing. There's two things, right? There's trading, forex, and there's stocks, So, basically, what people try to do is they try to be stock traders. You're gonna lose your money, definitely. You won't get anything from them. Now, think of being an investor, right? Now, there's three things you have to think of when you're an investor. One thing you have to understand is you are not an investor per se. You are a business owner. You understand? When you are buying stocks, you are buying a portion of business. Let's say, for example, there's a company. I'll call this company A, for copyright and other things, copyright infringement and stuff, right? Call this company A. Now, company A has 1,000 outstanding shares. What does that mean? It means the company has 1,000 shares that it's willing to sell to who? To the investors, right? Now, if company A has 1,000 outstanding shares and you decide to buy 10, let's say 10 shares of that company, right? So it's 10 divided by 1,000, right? Which, when it comes back to 100, you now own 1% of that company. Whichever company you choose, you understand? Now, a lot of people, they go to the chart. People are used to forex, right? Analyze the chart, you do your technical analysis, your head and shoulders, things like that. That's not important. You understand? That is irrelevant in stocks. Okay, let's take Apple. When you look at a company like Apple, do you look at the charts? Or do you look at the work that they do? You look at the technologies that they're developing, right? So for me as an investor, I look at those things and I'm like, okay, I can see that Apple is now picking up iOS system, right? We have Android, we have other systems. Android, yeah, bad. Microsoft is, you understand? Which company do you think is the best right now? Obviously, it's Apple, iOS. Doesn't it make sense for you to go and buy stock, yeah, iOS, yeah, Apple? Because there's value in the stock, right? It means you're going to get a great return from that stock. You understand? Now, a lot of people, they go to the chart, they do that. And I'm just looking, and I'm like, okay, fine. You do what you're going to do, right? I bet on you, you'll never make money out of that. I bet on it. I can bet, I don't have a house yet, but if I had, I could bet that. Now, if I'm buying, okay, I'm looking at Apple, I'm like, okay, I'm very observant, right? I look at my surroundings, I'm like, Okay, everyone has an iPhone. I've got a stock, iPhone, right? What does it mean? When everyone is buying that thing, what does it mean? The value of the stock goes up. So do you see what we've done there? I've killed two birds with one stone. It means if you have a friend, you take nice pictures from iPhone high again. And now the value of your stock went up. So do you see? You understand? Now, here's the thing. A lot of people do struggle to pick their stocks. First thing, which is mostly important, is not the technical analysis. It's the fundamentals of the company. Like the company's balance sheets, the company's key people, and obviously the characteristic of the economic side of the business, right? If iPhone decides to shift and like we are making cars, right? Let's say battery cars. Obviously, I know that there's Tesla there, right? Does it make sense for me to go and invest in an Apple stock if they want to live doing cell phones and MacBooks, and then they now want to do cars? Does it make sense to you? In most cases, it won't make sense because I think Tesla has perfected their product, right? So in most cases, the value will depreciate. What does it mean about your stock? You've not made money, right? And you'll be like, I this scam, right? It's not a scam. You understand? Now, let me just give you a practical example. Let's say you go to ShopRite. You wanna buy a washing powder. I won't say the name. I think it's 70 rand, 75 rands between there, right? If you go there and you find that on that particular day the stock is, the washing powder is 100 rands, will you buy that washing powder? No. It means the washing powder is being overvalued, right? Doesn't have value, right? So you won't buy that. What are you waiting to do? You're waiting for it to drop below the 75 rand mark. Now I know that's the true value of the washing powder. You understand? Similar to stocks. That's how it is. So obviously, stocks are driven by two things, right? It's three things: supply, demand, and intrinsic value. It's three things, supply, demand, and what? The intrinsic value. Obviously, when you talk about supply, you are selling. Demand, it's buys, right? If there's more demand, it means there will be more what? Supply. If you've got a book, okay, let's say you've got a shoe, you're selling it for 1,000 rands. She wants it, he wants it, he wants it. What do you do to that book? You increase the value because it's demand. You understand? Now, I'm looking at that as an investor. I'm like, okay, people are buying that shoe. It's not the true value of the shoe. I cannot make profit from that. You understand? What am I looking for? I'm looking for an opportunity. Because what the market does is the market corrects itself. You understand? Remember, a lot of people, I think, mostly did economics and stuff. I didn't do economics. I learned this because I understood that in the economy that we're living in, you need to have a diverse portfolio in your income streams, right? You cannot depend on one thing. You cannot depend on the job. If you depend on a job, I bet on you, go to a parking lot where there are people who are employed, good jobs. Look at the cars they're driving. And if it inspires you, then, we are inspired by different things, right? That doesn't inspire me. You understand? So I'm like, okay, how do I go about this? I look for different opportunities, right? Now, as I was saying, a lot of people know supply and demand. They don't know about the intrinsic value. You understand? Okay, let's come to that. Okay, as we talk, I said you own how many percent of company A? 1%. So supposedly in your analysis, you'll be like, okay, in the company's existence, this company is gonna make 100,000 rands in cumulative free cash flow. That is money that's going to give back to the investors. You understand? Now you divide that money by the outstanding shares, which are 1,000. So I think 100,000 divided by 1,000, I think it's 10 or something, if I'm not mistaken. 100, eh? Yeah, it's 100, right? So so it means for every share that company A has, it's gonna give back how much? 100 rand per share. You understand? Now, if you go to the market and you find that the share is another thing. I'm sorry, I forgot about this. Another thing, the stock price that you see on the stock market is not the price of the stock. It's not the true price of the stock. That is the price of the last transaction between a buyer and a seller. It's similar to if you sell a shoe and then someone sells you sell it at 1.5. Which price are you going to put on the shoe? 1.5. Right. That was the last transaction. So a lot of people, they go there and they're like, oh, okay, the stock shop right, it's 20 rands. I'm going to buy there. No. You find that maybe the stock is undervalued or overvalued because remember, there are other fundamental things like did you see what happened to the rand versus dollar in the past few weeks? Do you see what happened? So those are fundamental. You cannot control that, right? So they tend to bring overvaluing or undervaluing of what? Of a stock. Right? So I'm looking at that, I'm like, okay, I'm gonna go back to the market. I'm gonna do my analysis. These companies, they have financial statements. It's always there. It's just that, people go and look for information in the wrong areas, to be honest. You understand? We have Yahoo Finance. We have easy equities. How many know easy equities here? Yeah, it's a problem if only a handful of people know easy equities. You understand? Because, for me, it's something that everyone should know about stocks. It's not rocket science. It's very easy. It's not difficult. And who would want to earn passive income for the rest of their lives? I do. I don't want to work every day to earn money, right? Yeah. So don't think investing is something that is for the rich. No. Where did the rich start? They were born rich. Were they born rich? Okay, some were born into families, right? But it started somewhere. You understand? So it's either you sit down and be a victim or you be like, okay, doesn't care. I don't care. At the end of the day, I have to do what I have to do, right? Yeah, so guys, I also wrote a book. I've not released it officially. This is just, it's a pre-order. You can look at everything else. I've got my contact details, my email. So basically, it's teaching people just the fundamentals. That's the basics of understanding a market. When you open a chart, do you look at the chart? You can open a chart. Does it tell you about the company? You buy a stock, Apple. Does the chart tells you what Apple does on running their business? It doesn't, right? You take 100 rands, you go and buy tomatoes. You want to sell, right? What have you done? You've invested. You understand? Comes back here. It's similar thing. It's the same thing. It's just that stocks is an exchange. You understand? If I've got a stock at Apple, you want it, I wanna sell it because for some reason, maybe I need the money, right? I'm giving you my stock. You're giving me money. You understand? So it's still the same concept of buying and selling. It's just that now we're doing it electronically, right? So guys, due to time, but I appreciate the platform that was given to me. Hopefully, you take my details and then you just, if you have anything, you just ask me and then I'll explain everything, right? So I'm glad I was given this opportunity. Thank you guys and thanks for everyone who was here.